Good morning, everybody. It's Monday, July 24th, 5:28 a.m. Central Time. Sharply higher trade in the grain markets this morning. December corn futures up 25 cents at 561 and a quarter. November soybeans up 19 at 1420 and three quarters. December Chicago wheat up 41 and a quarter cents at 759. December Kansas City wheat up 34 and three quarters at 901 and a half. December spring wheat up 32 at 928 and a half. We've got some weather, but I think the Black Sea headlines are probably the big price driver this morning. Let's start there.
So, Russia continued its attack on Ukrainian grain infrastructure last night. Ukrainian grain warehouses on the Danube River, one of Ukraine's alternate shipping routes, were destroyed in overnight air attacks. Russia has also continued its attacks on grain infrastructure in the port city of Odessa. In addition, Russia reported overnight that its authorities found trace amounts of explosives on a grain ship headed for its own Black Sea ports, indicating that it may have been used to deliver explosives to Ukraine.
So these attacks on facilities in the Danube River are a big deal. This is what the news wires are saying about this morning. This is from the Wall Street Journal. Ukrainian grain traders began building up capacity on the Danube River after Russian military action closed off Black Sea ports that typically shipped 95% of Ukrainian grain exports. Though still comparatively small, the Danube became an important outlet. Barges transported grain down the river to the Romanian port of Constanta, where it was loaded onto larger vessels for export. Bloomberg also had a piece on this. One analyst said these ports are the biggest hope for Ukraine to export its grain and oil seeds. At the moment, it's unclear how much damage is done and if Russia will perform frequent attacks in the future. So this is a big deal. This is why the markets are up this morning. We opened higher last night, I think, on weather. We've got a hot and dry forecast. We'll get to that in a second. But this is by far the bigger deal here, in my opinion. Now, they're going to have a meeting about this week, I guess.
They are. The NATO Ukraine Council will meet this week. A new NATO Ukraine Council will meet on Wednesday in response to a request from Ukrainian President Volodymyr Zelensky. The meeting will address Russia's withdrawal from the Black Sea grain deal and the establishment of a corridor for grain exports. Russia's President Vladimir Putin said over the weekend that Russia exited the deal because it had lost its meaning. And of course, as we just mentioned, since the deal was terminated one week ago, Russia has repeatedly attacked Ukrainian ports.
So, in terms of what's at stake here, Russia and Ukraine are projected to account for 58 million metric tons of wheat exports this year. That's 27% of the global total. And for the moment, it appears as if only the Ukrainian portion is at risk. But if this thing escalates enough, you may make the argument that maybe all of it is at risk. Ukraine projected to account for about 10% of all global corn exports. So I think that this is the big deal here this morning, even beyond weather. But the weather is a bullish deal too, in my opinion, at least.
The U.S. Corn Belt will be hot and dry this week. Above normal temperatures have already hit the U.S. plains and will arrive in the Corn Belt by tomorrow. The 5 and 7 day government forecasts call for little to no rain across key corn and soybean areas this week. Both the Euro and GFS models indicate that rain may return during the first week of August. Temperatures should moderate around the same time.
It's going to be a rough week. It's going to be a rough week. It's going to be hot and dry pretty much everywhere. Highs in the 90s. Maybe some areas will hit 100 degrees, even in the central Corn Belt, Iowa, Illinois. Beyond that, yeah, you're going to see some rains come back in and temperatures moderate a little bit. Although even the 6 to 10 and 8 to 14 day government outlook is still calling for above normal temperatures in some areas. So I think this is a negative in terms of crop prospects. I mean, let me know what you guys think. If you think this is a big deal for the corn and soybean crops and production prospects, drop it in the YouTube comments. But I see this as being a friendly forecast. It would be a heck of a lot more friendly if you saw the same forecast, say, a month ago, and you were going to be hot and dry going into, say, 4th of July or maybe middle of July, late in July into August. I don't know if it's as big of a deal, at least as it relates to the markets. The markets and the crop aren't always the same thing. But this is a friendly forecast. So you pair this with the Ukraine-Russian news overnight, and you've got yourself a rally. Absolutely.
So if you guys have not already checked out our premium subscription, you need to do so. Joe, can you tell me about the video you put together on Friday?
We talk about real world grain marketing in the premium videos, and Shay Folk from AgView Solutions joined me on Friday last week. Back in, I believe it was September of last year, Shay was on in one of the videos, talked about his aggressive forward marketing of corn and soybeans for the 2023 crop year. And this was back in September. So here's a young guy who's in a not a unique situation, but a situation where he's got higher production costs, he's got some leverage, he's got some debt, and he talked about his real world grain marketing as a younger farmer in that environment. So on Friday, we went back and revisited that video and some of the forward sales. This was a really popular video. Guys, if you're a younger farmer, you're just trying to get into grain marketing, you got to sign up and watch these videos. There's some absolutely fantastic stuff here. Shay does a really great job with explaining explaining his logic, how his budgets, break evens played into this. There was a video on, I think Shay's video is actually Thursday. On Friday, I had a video regarding the funds. Why do we allow the funds to run the markets? I think there's a lot of misunderstanding and misconception here. So I ran through everything from, CME is a publicly traded company, to why are funds allowed here, to the opportunities they present, but also the downsides of having speculators in the market. Guys, if you want to see the premium stuff, go to standardgrain.com this morning. You can sign up with your credit card on your phone or computer, $50 a month. Cancel it anytime, no other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of information about grain marketing, grain markets. Morning email goes out about 5 a.m. Central Time. There's a new premium video every single day. Give that deal a shot this morning, guys.
Large money managers are still net short the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending July 18th, the funds were net buyers of 10,000 contracts of corn. They were also net buyers of 11,000 contracts of soybeans. They were net sellers of 3,000 contracts of SRW wheat for the week.
Okay, so even at Friday's close, funds were still estimated to be short like 40,000 contracts of corn and 51,000 contracts of SRW wheat. So you've probably got some short covering going on this morning, probably some speculative buying. The net long in the soybean market is modest historically. You get up to 150,000. I'd probably call that maybe on the larger end, and we may very well be headed in that direction. We'll see how interested the market and traders are in this Black Sea deal, like for real here the next couple of days. I mean, overnight, this is the knee-jerk reaction. Are we going to be able to sustain these gains on the Black Sea stuff? I suppose we find out.
Interest rates are expected to increase to their highest level in 22 years. The Federal Reserve is poised to raise interest rates by a quarter point this week, the 11th increase in the last 16 months. Experts believe recent mixed economic data will keep the door open for the Fed to raise rates one more time this year, most likely in September. The European Central Bank is also expected to raise rates this week. The Bank of Japan remains an outlier as they are forecast to leave policy untouched. The Federal Reserve's rate decision will be released on Wednesday at 1 p.m. Central Time.
I don't know that another quarter point is going to do a ton to affect the overall economy one way or the other. As it relates to a lot of you guys who borrow money, you can expect those operating notes to be even higher for 2024, and you can expect the cost of money, I think, to stay higher for longer. I think that's the Fed's message here. We're going to be higher for longer. There was talk, a couple months back that the Fed may even uh, uh, cut rates at some point in 2023. I think that sort of idea is very much off the table right now.
So the U.S. cow herd is continuing to shrink while cattle on feed declined slightly last month. Cattle on feed as of July 1st were reported at 98% of year ago levels, slightly above the forecasted 97.7%. Placements in June were reported at 103%, much higher than the expected 98.1%. Marketings last month were 95% of year ago levels, spot on with the expectation of 95.2%. The mid year inventory report came out this past Friday, showed the U.S. calf crop declined to 33.8 million head. That was down 2% from last year. The trade was expecting a decline all the way down to 33.6 million head. The beef cow herd has declined to 29.4 million head, down 3% from 2022, and the lowest numbers we've seen since January of 2014. So undoubtedly, this inventory report is quite bullish. The cattle on feed report, though, is definitely bearish for what we saw on Friday.
Was there much in terms of cash cattle trade late last week?
Yes, actually, there was. Cash cattle trade was up for the week. Let me see here. In the north, it was up anywhere from $3 to $4. In the south, up $2, up about $2, and in the western corn belt, also up $2.
Outside markets this morning, guys. U.S. dollars up just a little bit. Stocks are higher. The S&P's up 10. The Dow Jones up 60. Gold's flat. Bonds up a little bit. Crude oil is up 65 cents in the September WTI at 77.72. Have a great week, everybody. We will talk to you on Tuesday.